The market is about to shift. XRP/Ripple major cyber attacks happening. Hello guys, welcome to our channel. Today in this video we are going to discuss why the market is about to shift and major cyber attacks happening on XRP/Ripple. But before we start, make sure to give this video a big thumbs up, and if you are new to the channel, don't forget to subscribe before leaving. Also hit that bell icon so that you can get notified whenever we will upload a new video. For now, let's get back to the video straight away.
You want to win an iPhone 12, maybe a MacBook Pro? How about $500 cash? You decide. All you have to do is comment the secret hidden message somewhere in this video, and leave a like on this video and subscribe to the channel so we can keep affording these giveaways.
Certain members of the United States Congress are attempting to cancel crypto, at least crypto innovation. Over 15,000 people have already called their local senators. In today's video, I am going to call my local senator live on air with you. We are now connecting you to the DC office of Senator Dianne Feinstein. The government aims to partially cover the cost of a massive infrastructure bill by taxing crypto companies, and the entire industry will feel it in taxing crypto companies. Some crypto companies on the surface level are not bad. The issue is on how this bill is worded. The trouble is that the bill defines a term normally used to describe the likes of Coinbase and Robinhood. They define it as basically any business that touches crypto. This definition is so broad it could apply to nearly every economic actor in the U.S. crypto industry. If read literally, the catch, all broker term could apply to U.S. miners, $5 startups and others who will have to file customer forms with the IRS, a task that is in some cases impossible, and this would essentially kill crypto in America. To be clear, it would not kill Bitcoin, it would not kill Ethereum protocols, like that would probably take a hit on the news, but then innovation would just be driven elsewhere. If the crypto bill passes, as is, then it will essentially put America out of the crypto game economic opportunity. As big as the internet is about to be pushed overseas, and millions of Americans may be even more left behind by the crypto revolution than they already are, and you may not even live in America, but if the USA is out, everybody loses. So what can I do? Well, first off, and this may be small, we can like or engage with this video in some way just to get this information out there. But secondly, and more importantly, there is a bipartisan amendment being put out there by some pro-cryptocurrency, pro-innovation senators. These are Democrats and Republicans. Bipartisan have introduced an amendment that would fix the language and clarify that the expansion of the definition of a broker doesn't apply to open-source software developers or validators like miners and stackers. So this means that companies like Coinbase, like Robinhood, would still be taxed as brokers, crypto brokers, but for the average software developer, for the average node runner, people who validate transactions, miners and stackers would not be treated as brokers. The bad news is that other Senators Warner, Portman and Sinema, have introduced a separate amendment that would make the original bill even worse as of a few hours ago. This is where we stand. A quick explainer on what happened with the infrastructure bill last night. We were on track to pass the Wide and Loomis-Tommy amendment, the good one to fix the worst issues with the bill, and then Senator Rob Portman and Mark Warner came from nowhere to blow it up. As a refresher, the amendment, the good one, was set for a vote yesterday and appeared likely to pass. It had strong support, thanks largely to all your calls, and even Senator Portman, who led negotiations on the original crypto provision for the Republicans, suggested he was for it. So everything was looking fine. Then, in a DC flip-flop, so fast it'll make your head spin, Senator Portman proposed his own competing amendment, co-sponsored by Senator Warner, a Democrat, meaning there's two, is also bipartisan, opening up the vote to everybody. The Portman-Warner amendment is worse than useless. It doesn't come close to passing the laugh test, and you can read the exact wording here. But the Portman-Warner amendment only protects proof of work miners like Bitcoin and some, but not all wallets projects. That's it. So this is essentially America choosing the winner, saying we'll support Bitcoin, or we'll make it easy and non-invasive on proof of work. Miners like Bitcoin miners, some wallets, not all, but not it. If you have a proof of stake protocol, we're still going to treat you like a broker. It also does not protect software developers or Lightning node operators or any proof of stake validators or DEX LPS liquidity providers or DeFi aggregators or many other non-custodial actors who can't comply with these broker laws. We have two competing bills, one good and one terrible, both coming up for a vote tomorrow, and you may be saying, well, it's sort of obvious that the good one will probably win, right? It shouldn't be obvious to everybody. It's not that simple, because it looks like the bad amendment is a continuation of the U.S. Treasury Department's embrace of warrantless surveillance and a crusade against financial privacy in crypto. And get this, word in DC is that this whole thing was the Treasury's idea. They don't like what we're building, and their solution is to obtain jurisdiction over non-custodial actors. They tried this via FinCEN's proposed rule last year, which failed, and now they're trying again. So what can we do? Because this is being voted on by senators tomorrow, meaning in the few short hours we have left before the end of the business day. We need to call our local senators and tell them what we want. We can stop them from doing that. We need to make more calls to senators, a lot more. We need to tell them to vote yes on Wyden Loomis Toomey and no on Portman Warner. If you're willing and able, please use the number and script here to call today. I will link this down below in the video description. I've actually already pulled it up, and although I want to end today's video with a clip of what we're fighting for, a little speech from Cynthia Loomis yesterday, let's make a call together following the instructions on this Fight for the Future org webpage. So let's call. I am seeing this now for the first time. Let me type it in. 51720095118. Call speaker, music. Hi. Thanks for calling to stop the Senate from expanding financial surveillance of the crypto economy via the federal infrastructure bill. Garlinghouse has stated numerous times in the recent past that Ripple can no longer stay in the US due to regulatory tension and uncertainty. The SEC's lawsuit could prohibit Ripple from being accepted in other regulatory countries and alter its global reputation. Despite the fact that the United States is a minor market for XRP, it has the ability to impact the currency's impression in other markets. Another possible outcome of the case is that the government can briefly use Ripple as a scapegoat for the entire crypto sector, directing all of the sector's problems to a single project. Declaring XRP non-security, on the other hand, might create a legal precedent and provide deregulators a legal foothold to target other cryptocurrencies. According to current lawsuit statistics, the U.S. Securities and Exchange Commission is only stalling. Sterling may be the second tactic, according to financial feeds, to harm Ripple's business to the point where they attain their desired settlement circumstances. Otherwise, the regulator could be rendered ineffective for years if the fair notice defense is invoked. While nothing has been resolved yet on whether XRP is a security or not, the judge did deliver a bombshell back in March. Our view of XRP is that it not only has a monetary worth, but it also has a utility that sets it apart from Bitcoin and Ether. If the judge determines that the financial watchdog failed to provide adequate warning, the decision will be used by future Bitcoin companies facing similar litigation. Surprisingly, the government utilized this as a scare tactic to convince the judge not to accept the fair notice defense. The SEC has not established good cause to extend the discovery, according to Ripple, and an extension would be detrimental to Ripple's business. It's likely that the regulator's objective is to put as much pressure on Ripple's business as possible in order to get the greatest settlement agreement possible. Ripple Labs is different from other defendants in that it is well-funded and appears to have a case to argue that the lawsuit is unprecedented, which might lead to a victory on the fair notice defense. That is most likely the SEC's most feared outcome. As a result, the regulator will do everything possible to avoid getting there, including postponing the case in order to harm Ripple's business. Ripple also intends to go public. This is only conceivable if the litigation is totally resolved. Else, the price of the tech asset on crypto exchanges would skyrocket. Wall Street is already betting on a big public listing, which will boost the company's market value as investors flock in. As a result, there is a big opportunity for XRP and XRP holders, but we'll have to wait until the litigation, which has been dragging on for a long time, is finally done. The XRP price has been nursing its wounds since the 18th of June, when it hit a 3-month low of $0.7691. Bulls are attempting a comeback across the board in the cryptocurrency market, with market sentiment rising somewhat in anticipation of the weekend love returning. After dipping to slightly beyond $35,000 on Friday afternoon in the United States, Bitcoin has reclaimed the $36,000 mark. The price of the 7th most traded digital asset is likewise moving in the same direction. Despite the long-running SEC v. Ripple case, more upward attempts look difficult. The SEC's request to search for records of Ripple's general counsel and Deputy General Counsel was denied by the court because they were private communications. The bears yielded a daily closure below the rising trendline support, then at $0.8487, confirming a negative breakout from a month-long symmetrical triangle formation on the daily chart the day before. Because the price has been producing lower highs on the specified time frame, a bearish break was unavoidable. Furthermore, the Relative Strength Index, RSI, continues to wander aimlessly below the midline, confirming the bearish sentiment in the Ripple market. Please note that the information is given for educational and entertainment purposes and should not be considered investment advice, financial advice, or trading advice. No purchase of cryptocurrencies is recommended in our content. Crypto markets are very unpredictable, and investing in crypto markets is risky. Before making any crypto investments, viewers should do their research on cryptocurrencies and consult their financial advisors. That's it for today, guys. We will see you next time. Until then.